Star Mountain Capital lends money to small and mid-sized companies across the country. Why do you tend to play in this arena and not the larger companies?
Greg, we like the aspect of smaller companies where it's a less competitive marketplace. It's ultimately harder to find these companies. It's more time consuming to underwrite them. And ultimately, we believe that allows us to target a higher return profile.
So people often assume that smaller companies have more risks involved when you lend to them. Is this necessarily the case?
Not all small businesses are equal, Greg. There are many small businesses that have 10, 20, 30-year operating histories, and we believe the ability to have lower leverage levels and tighter covenants to some of these smaller businesses can mitigate potential risks. And ultimately, risk is a multivariable equation that we believe there is a way to invest in them without having a higher risk profile.
Can you talk a little bit more about the way that Star Mountain Capital invests in these small, mid-sized companies? Because banks also lend to them. How do you do it? How do they do it?
Star Mountain has created a model where we are a value-added partner to these businesses. We help them find acquisitions, evaluate them, integrate them. We help them develop their board of directors and really help institutionalize and take them to the next level where they can generally command a higher valuation that we look to participate in for our investors.
Can you talk about how an investor in Star Mountain Capital and one of your funds would place this in their portfolio? What type of correlation does it have to their fixed income portfolio or even their equity portfolio or any REITs they may have?
When investors are looking at the lower middle market, generally, I believe they're looking for higher alpha, higher returns as one objective. A second objective is they're looking for less correlated assets. If you think of a peanut hauling company in the Southeast, or you think about an assisted living business in Texas, and you ask yourself, how correlated is that to big tech, to different political, geopolitical challenges that we're facing today? You can see how it's highly uncorrelated, and a lot of investors are trying to build more balanced and defensive portfolios.
And then finally, yes, it's uncorrelated. However, everyone's getting hit by higher rates, and the Fed seems like they're going to keep going with their rate hiking policies. So how will this affect small, mid-sized businesses going forward, and in effect, Star Mountain Capital?
It's a great question. Ultimately, for larger companies that have higher levels of leverage, I think there could be a lot of challenges ahead, which we think is one thing that may push us towards a recession. One of the beautiful things that we think about small businesses is they don't want a lot of leverage, because that matches well with us not wanting to put too much leverage on their balance sheet. And ultimately, different rating agencies such as Moody's have found that the amount of leverage on a company is actually the largest predictor of future defaults.
All right, well, thanks a lot for coming on and talking about it.
Thanks, Greg.